Today, we're talking about the three key ingredients needed for an uptrend to form. Number one, a greater amount of 1% gains versus 1% losses. Two, a small amount of combined plus or minus 1% moves. And three, of course, successful bullish pattern. So let's start with a greater amount of 1% gains versus losses. Now, this is very easy to understand, but not easy to achieve at times, right? And so we just had our second 1% advance of October, which was also the second 1% advance in the last 7 days. So a cluster like that was last seen when we had 2 within 4 trading sessions at the end of August here. Now, again, that did not lead to the necessary follow through other than just a 2 or 3 days afterward. And we, of course, we know that the market sold off soon thereafter. But if we go back to the beginning of the second quarter, when things really started to change with the uptrend then resulting, we did see, right, 1% gains pop up basically every week or so. And again, we don't need to see a ton of these. We don't need to see the gains that large as well, but we do need to see a semblance of buy side interest on a consistent basis to get this market really moving in the right direction again. And when we talk about 1% gains, of course, we have to talk about 1% declines as well. And so, not surprisingly, when August began, we started to see 1% declines come to fruition again. And remember, we went over 2 months without one, right, which basically captured the entire June and July. And then things, of course, changed. And so over this time frame, there were 7 1% declines. And again, only those 2 1% gains in there. And not only that, this was very consistent downturn. This was over 2 months, so the longest drawdown we've had of the year, almost the biggest as well, getting down to almost 9%. So now we've gone about 9 days without one. Of course, there's the beginning stages, but this is the type of thing we need to see flip, because going forward, we can't assume that we have an equal amount, 1% declines and gains, we're going to make much ground, because that's really what happened in 2022. Now, overall, though, we do want to see a small amount of both combined 1% gains and losses, because, again, things really changed in April from that matter, because in January, February, and March was really a continuation of what we saw in 2022. A lot of big moves in both directions. That connotes two-way volatility and just makes for a very challenging trading environment. When that drops off, volatility drops off as well. The moves become smaller. The breakouts become more trustworthy. And in essence, you get a boring tape, and that typically leads to uptrending action. And we saw how that has dropped off since then. And I would point to even September and August didn't have a lot. The difference, of course, was that there were more 1% declines than gains. So there's really a buyer strike in here. But overall, still didn't have the amount that we had back here in the first quarter. So we need to see that type of thing continue. And of course, successful bullish patterns, which will come after all that. And so we're looking at this, again, from a short-term basis first, only because it captures all the action from right before the low, during the low, and then afterward. And so this is a 2-hour chart. We saw that breakout here, right here at 4330 area. It's been trying, but we have not seen that upside target acquired yet in your 4450. And it's extremely important to eventually happen relatively soon, because, again, this is very short term. We can get a very quick down day, of course, and this will be negated. But so far, it's trying to hold. And if it does, it will be, again, a sign that the things are moving in the right direction, because we can't assume that a bullish pattern bigger than this will work out unless a shorter term version happens first. And all that is needed for an uptrend to actually form right now. And so over the last few days, we see that smaller bullish formation occur on top of this one. Again, not all of these are going to work out perfectly, even if we end up getting higher going forward. But this is a type of action we want to see occur, where we have a foundation, a breakout, a mini foundation again, and then it can rally from there. And the reason that's important is because if we then look at this on a daily chart, this is what it looks like: a potential cup and handle formation, which encompasses over the last 4 weeks of action. And that's important to see, because we saw something similar to an even larger back in August and September, where it looked like a cup and handle formation, or inverse head and shoulders pattern, whatever you want to call it, was about to be completed if we just had 1 or 2 more days of positive action back in mid-September. That did not happen. Never even saw a breakout. And of course, the resulting downturn occurred. So another reason to see or how important this is to see that breakout occur, because back here, looking back again toward the second quarter, how many times we see a breakout through a top here and then continue higher without any type of revisiting of the breakout zone. That's important to see. That will need to change going forward if it's going to do anything different than what happened here. That's all we have for today. Check out other videos we have here and subscribe. And I'll talk to you next time. Thank you.